This is Butch Shorak, Options University, and good morning, ladies and gentlemen. This is Monday, January 14th, 2013. Access to this video is for educational and informational purposes. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money you cannot afford to lose. And the week has taken place, and we're well into the month of January, into a new earnings season. And as we look at the week, we see that for the Dow, the NASDAQ, the S&P, and the Russell 2000, we had percentage changes of 0.4, 0.8, 0.4, and 0.2%. So all of them in positive numbers for the week. As we look at the first, a week of January is well underway. Now remember, as we go for the month of January, that is an indicator of exactly what we expect to have happen the rest of the year. And it has been said many times, it's simply stated, that as the S&P goes in January, so goes the year. This is indicator that's been used for quite a few years, has an 88.7% accuracy rate with only 7 major errors in 61 years. So this month will give us a good idea of where we're going, as this week we're edging our way to new highs for the last 5 years. Economic announcements coming for the next week. Let's take a look and see what we've got going on. Little or nothing happening on Monday, the 14th. Looking at Tuesday, we see we got PPI. We've got retail sales before the market opens. We've got the Empire State Manufacturing before the market opens. Going into Wednesday, we got CPI, industrial production, housing market index, all going to give us some kind of an indication of exactly what the market's doing and where the market, what it did during the last month. As we look at housing starts on Thursday, jobless claims, which occur every single week, and of course we've got the Philly Fed survey coming out at 10 o'clock on Thursday morning. And then finally, the big thing we're going to be looking at just before the 10 o'clock time is consumer sentiment. So quite a week for us as far as economic announcements, and certainly not announcements that can move the market as we move into the month of January. Looking at our current trend, we see that we are definitely in an uptrend, and we're in an upcycle in that uptrend, and we've been in that upcycle for a bit of a time. We conquered the fiscal cliff right back here in the beginning of January, and we saw that we actually had a gap up on this day, and then we went sideways, absorbing some of that gap, and finally on Thursday and Friday we broke out. And broke up into new highs, headed for that previous high of a 5-year high, which is up around 1550. So we're moving our way on up. Notice we had a cross down here where the 30 crossed the 50. The 200 is sitting there, 50 is sitting there, 30 is sitting there. Definitely significant of an uptrend in the market. Let's see if this will continue on through January. As remember, the January barometer, which was created in 1972, by Yale Hirsch, gives us an indication of where the market's going for the next year. This first year of the second term of presidential, that's a presidential candidate that is reelected, is usually not the strongest of the 4 years. Next, take a look at the SPX for the last 5 days. We see that basically what we were doing was we were consolidating that big move which took place after the fiscal cliff. A little bit of resistance above that 1475 level, and then we see that as we head higher, we've got a 5-year high up there around 1550 or so. Looking at the Dow, we'll take a look at the Dow. We see the Dow is following much the same pattern, definitely in an uptrend. 30 crossed the 50 back there, and we see that we're headed for those previous highs for the last, this chart is a multi-year chart, and we see that we have a previous high sitting right up there above 13.6 and 13.7 between the two of them. And we're inching our way up as the Dow is showing good relative strength to the overall markets. As we look at the NASDAQ, we see that it's a bit of a lagger, but if we look at it over the same time period, actually this is a 6-month chart, we see that we're headed for that previous 6-month high with the NASDAQ, as the NASDAQ is above that 3,000 in a very healthy way. We're a bit extended as we're above the 30 and the 50-day moving averages quite a ways, and we will get some kind of correction on our way up. Looking at the Russell 2000, which usually has a pretty strong January, again we've got the crossover that took place, fiscal cliff, move up with the fiscal cliff, and the Russell 2000 showing great relative strength. Notice that it's in a high for the last 6 months. So moving up sharply is the Russell, which typically does that in the month of January. All right, we're in an uptrend. We're in all of our indexes and headed higher, looking for those previous highs. Looking at the VIX, we see that we had a bit of a passion come into the market, bit of panic as we went up into the 23 area just before the fiscal cliff. Boy, wow, we're at all-time lows. Time for a bit of a pullback. As we see, we're down at that 13 level, which is the very low end of the VIX. So we could expect some kind of pullback here shortly, as we're getting a bit overbought. As the market went up, what do you expect bonds to do? That's exactly what they've done, and bonds have been pulling back as we look at the last 6-month period. All right, look for a bounce in the bonds as if the market does have a bit of a pullback. Expect that pullback to be temporary unless we get some big move caused by news. Financials, Wells Fargo finally came out with its earnings last weekend. There was some weakness in it, and Wells Fargo had a bit of a pullback on Friday, and that affects the overall market. Our XLF is at all-time highs. We'll see what the banks do as we have more bank earnings in the coming week. Looking at oil, what did oil do as the market was pulling up? Oh, look at the oil's following up, and notice here's the 200, there's the 30 and the 50. We did get a crossover in 30 and 50, but we're a long way from the previous highs. Looking at USO, which is our indicator, our ETF for oil. And then finally, let's take a look at our safe haven as in gold, and see that gold has been just working its way down, basically sitting right about that 200-day moving average at the moment, in a downtrend since September, as gold has been selling off its previous highs. So we see that the market has been strong. We've got different movements in some of our sectors, and all of these things provide for us opportunities as we're now trading like a real market. What kind of news can we expect as we move into the January? Well, we're in the height of earnings season. That certainly will have an effect on the market, and will have other fiscal cliffs as we go through the first quarter here, and we'll see how Congress handles them as we go our way through. Looking at the last week, what kind of volume did we have? Well, here's our SPY, which again we're headed towards those 5-year highs, and notice we're doing it with basically average volume, as the volume is showing a bit of a little jump there as we did break out of that sideways trend that was taking place there and there. So SPY showing us good strength, getting a little overbought. If you wait for that pullback, you'll have an opportunity to get in a little cheaper. Notice the 30-day moving average is sitting down there. Stay poised, stay ready, because we are in an uptrend. All right, so for those of you that stick around and are gold members, we've got our stocks to watch. We'll take a look at them. For those of you that are not, for more free videos, go to www.optionsuniversity.com, free gold, and you'll be able to see other free videos that we have. That's www.optionsuniversity.com/free gold. With that thought, this is Butch Shorak. It's Monday, January 4th, 2013. We're in the heart of earnings season, or a lot of earnings will be coming out in the next 2 to 3 weeks, and we'll find out exactly what our companies did last quarter. And so thanks for being here. This is Butch Shorak. See you soon. See you next week. And to our gold members, welcome back. Let's take a look at our stocks to watch. First thing we're going to take a look at is we're going to look at the SPX, and we see 1472, so we're up around this level right up here. So we've got resistance up here at 1474.50, then at 1485, up at 1505, and those are the directions that we're heading as we continue in this upward direction. We have support below us at these other levels of 1463, 1458, and 1440. So keep these in mind as we see our pullback, and notice that if we look at our 30-day moving average, we're sitting there right about at 1430. So don't be shocked by a pullback. That would be a normal pullback in an uptrend, and if we actually extended our lines, we would see that we're about due for that pullback as we are sitting at resistance. The air is getting thin up here, and it is time for that pullback, probably to around that 30-day moving average if we continue with this bullishness in the market. And then let's look at one of the stocks that certainly has continued to stay bullish as the market's moving up, and we'll take a look at Amazon. And we see that Amazon sitting there consolidating, air getting a little thin. It is good for a bullish trade on a breakout with volume. Otherwise, wait for this to pull back to the 30 or the 50-day moving average for your next entry. Amazon has showed great relative strength. We've got earnings coming up here in a few weeks. Right at looks like the beginning of February. So keep that in mind for any of your short-term trades you do not want to hold through earnings. Looking at Apple, we see we're running into earnings with Apple, and where are we running? Absolutely nowhere. Where is Apple going? What kind of trend is it in? Down 25% from its previous highs. Then we'll need to break out of that descending triangle in a strong way with volume, and it'll take news to do that as Apple has lost some of its glamour. Next, let's take a look at AutoZone, and looking at AutoZone, we see that it too has lost its glamour. Looks very much like Apple as it keeps pulling back lower and lower. Going to the restaurant business, let's take a look at Chipotle. And looking at Chipotle, we see that the Mexican grill is going sideways, basically going nowhere, sitting right at about that $300 level. Look for a bit of a pullback for any potential bullish trades for our option traders. You might look at something that you could look at for a stock that's going nowhere, such as butterflies and taking advantage of theta with verticals and condors. CMG, good candidate as it doesn't seem to be moving much of any place. Next, let's take a look at Google. All these companies you must watch for earnings. See that Google's having a bit of an earnings run as we see it moving up towards its previous high of 775. Short-term trade might one might look at that, but earnings are only about a week away. So be careful of Google, as you know what can happen with its earnings. It can go 100 points one way or the other. We've seen it do it before, and it will do it again. Here's a fine example. Was sitting up around 775, and after earnings pulled back to 675. 100-point move, so Google can go a long way in a short period of time. Green Mountain Coffee already had earnings, and did they like them? You bet they did. Stock's performing well. Got a buy signal on Friday with a higher high and a higher low. And so for those of you that are interested in this stock, the 30 is above the 50, which is above the 200. As we see, we have a new stock here that we didn't have before, and earnings is what can do that to these companies. All right, Green Mountain Coffee looking good. ISRG obviously had news. Don't know what the news was. Don't care. Running into earnings. Earnings could change the stock, but at this point seems to be a bit of indecision as to what's going on with ISRG, as this company that builds these robotic type medical devices, it seems to be having some problems after that announcement. Next, let's take a look at MasterCard. Looking at MasterCard, one of the market leaders, running into earnings, looking good. We'll see whether the banks, which will be making announcements in the next week, will have much effect on this stock and how it continues its run into earnings. Earnings, of course, could change the complete complexion of this stock, so if you're in any short-term trades, be out before earnings. Next, looking at McDonald's, we see McDonald's has had a bit of a comeback running into earnings again, showing us some bullishness headed for those previous highs for the last 3 months, last 6 months actually, as it's running strongly into earnings, looking good. Previous high 102 for last year. We're not quite to that point yet, but we have what looks like a top top there, a top there, and we certainly could expect another top there before earnings hit. So got a bit of a ways to move there with McDonald's. Nike, let's see what it's doing. It finally got out of its doldrums, broke out, had a stock split, and liked earnings with volume. And so this stock has a complexion of a bullish stock at this point. 30 above the 50, 200 has not yet come into place. Did a 2-for-1 stock split, I believe. So Nike looking pretty decent as they're just trying to do it. Next day, let's take a look at Priceline. Priceline we see has not gone near its previous highs. High there, a lower high there, and having trouble breaking above this 660 level. As we're a bit away from earnings on Priceline yet, this will fluctuate with the overall market. It looks like the kind of stock as it runs into earnings many times will run up, may have a potential on any kind of pullback to get into a new position on Priceline. WW Grainger, let's see what that looks like. It's been very bullish, getting higher highs and higher lows. Friday gave us a buy signal. Look for a potential earnings run out of WW Grainger, not going up to 220 like the arrow depicted, but certainly could go to some new highs here as we come into earnings. Earnings are coming up next week, so be out of this as a short-term trade for anything you're going to get into on WW Grainger. So those are our stocks to watch for you, Gold members. We appreciate you. We're happy that you're here. This is Butch Shorak Options University. It's Monday, January 14th, 2013. The big news is earnings. The big news is, will there be a new fiscal cliff? The big news is the market is bullish, and January sets the pace for the next year. Thanks for being here, folks.